The controversy is, I think, twofold. As far as AI has come in a very short amount of time, we're still very much in a fledgling phase, and the tools are constantly improving. So you will get poor results sometimes that, are not going to resonate with a prospect. People accuse AI of being fake. But multifamily has always began with renderings. Being transparent, your pricing is a major step towards that. Might be a challenge for a marketer in the short run, but ultimately a win for the consumer and a long-term win for the marketer.
Well, greetings, everybody. Welcome to another session of Riffing with Reed. And as we've been on this track, I think for a couple of months now, it's been more of kind of an around the world at Digible, sharing different perspectives from different, functions of our business, different roles. And perhaps the one I don't want to say I'm most passionate about, but is a big part of our signature at Digible is our account management, the experience, of working with Digible. But as I had forewarned Ian, who will be joining us to talk a little bit more about that. This in no way is meant to be kind of a Digible pitch or talk about how great we are. It's more just to kind of pull the curtain back on the day to day, but the things that we spend a lot of time on, and account management is, you could say, at the top of that list, right, Ian? So, a big part of the experience, and what I'm excited about with Ian is just, he's been a game changer, I'll say, for us from day one. Just brought so much energy and experience, and has been great with our clients. I think, has such a rounded perspective in the way that he thinks about, our universe, or our clients' universe, more importantly.
Thanks so much for the kind words, Reed. It's really great to be on. I've really been looking forward to this conversation. And yeah, just a quick background on me. I've been working in digital marketing for the past 5 years, specifically in multifamily for the past two. Beyond that, I have a background in business analytics. I actually did a master's at the University of Denver in business analytics, fully intending to go be a data analyst somewhere, before I came across the digital marketing world, as I was introduced to some employers, and ultimately the agency I ended up taking a gig with right out of my master's. And I've never looked back. My digital analytics, my business analytics degree, I think has lent itself to my career in digital marketing in a lot of ways, knowing how data driven the industry is. So, may not have been what I set out to do, but I've landed in a pretty happy place, and always looking to improve. But that's all part of the account management experience.
It's a great, I guess, starting point for us, as you talked about the importance of data. And I know that's not just in our industry, obviously, but when we think about account management, it's hard to not, I guess, find yourself in that position of data storytelling. It's like at the end of the month, or if it's in the middle of the month, but whenever you're having these conversations with clients, pretty quickly, you got to get to the data and start talking through that. So I'm just curious if you agree, like, it's a good place for us to start, and how you found success in kind of simplifying, but also, getting to the meat of, the data that you're exposing or sharing each month with clients.
Yeah, I think it is a good starting point. And I think one of the wonderful things about being an account manager is translating data for a lot of it, it's understanding it. So when we're looking at, dozens of metrics, whether we're looking at the cost per click on an ad, or how many folks are clicking based on how many folks saw an ad, we're talking about a click-through rate. These are all metrics that are, inherent in my blood. I understand what these mean from a digital perspective. But then when you talk with your clients, if you're talking with folks at property management companies, depending on their role, their experience with digital greatly varies. They might have a strong experience in digital, and I can shorten every metric to its shorthand version, and we can talk at length about how to make decisions based off the data itself. Or you have folks who haven't been exposed to it, and you can kind of get to a deeper meaning of these about talking about what you're actually looking at. If you're talking about how many clicks or how much traffic to the website you got, these aren't just clicks. These are prospective renters. And if they clicked and then landed on your website, did they stay on the website? Did they navigate to a couple of pages? So you can still hit the numbers, but you get a chance to actually connect with people in their world coming from my world in digital, not having to just relay metrics, but rather talking about what those metrics mean in terms of how we're trying to ultimately deliver a lease.
Totally. Well, there's so much data, and even just in reporting, between Digible and our PMCs properties, uh, not to mention all the data that sits outside of kind of our lane, I suppose. And what I mean by that is you have operational data, you have financial data, you have
Mhm.
submarket, inventory, uh, you know, employment, macro trends. There's so much that doesn't even that is not something we typically start with. So I'm curious if you could just share, like, I don't know if we call it best practices, but how you approach kind of all the noise that data can bring into a conversation, and focus that into a meaningful, productive discussion. Because just to, I guess, double down on this, but when you look at a report from us, if you're running multiple services, I mean, there's a lot of data in that PDF, and I'm pretty sure, knowing you, it's not kind of a robotic approach where it's like we're going to go one at a time, through all of this. You're trying to get at the so what really matters. So yeah, just talk a little bit more about how you distill it down. With There's so much that you could discuss.
Certainly. Yeah, with digital, I mean, the reporting we deliver, it's not no short of digital metrics to look at, but yeah, where do you start and hone in and actually understand what's working? And I think step one is for me to ensure that your campaigns are digitally healthy. Like, let me look at your metrics as a digital marketer and make sure those are all healthy to start. Once we've covered that basis, all right, now let's connect a little bit with the goal. What is the goal here? We're trying to drive leases. We're trying to lease up a building. We are trying to stay stabilized. That none of that data is going to be right there in my report. None of that's good. You're not going to get that from looking at who filled out a contact us form from our campaigns or what our cost per click is. Where you are going to start to get that is when you start to connect some of our data with some of our property management companies' data. If we're like able to look at a CRM system that tracks all of a property's leads. Well, if I'm seeing in our reporting that we're delivering a lot of leads, but we're not seeing those leads reflected in our clients' reporting, we've got some sort of a disconnect there. And that's ultimately where we want to be drilling into, because if we're not getting the leads in the CRM, there's not leads that are workable to be turned into leases. That's the ultimate goal here. So it's always important for us to talk about the digital metrics, but bring it back to the goal, because that's the bottom line, what we're all after here. And we don't want to be optimizing our campaigns in a digital silo without thinking about the client's data and their end goal.
Yeah, 100%. So you mentioned upfront just kind of a cursory review going into these end of month calls, reviewing like the health of their digital metrics.
Mhm.
And is that done with, I'll say, industry benchmarks, or is it done benchmarking at a regional level for certain property types? I think that's become common, and mostly in a good way, meaning that it's no longer acceptable for digital agencies and multifamily to just be passing by like the context or the benchmarks, and
Mhm.
just like, hey, you got a 3% click through rate, that's great. That doesn't work, and it shouldn't. It's like there needs to be more meaning behind these benchmarks. So yeah, I just wonder if you can unpack that a little bit further as you're trying to help them orient on what success looks like, for things like click-through rate, calls, online conversions, etc.
Certainly. I mean, as a digital marketer, I love a benchmark, but a benchmark is nothing without context. And so, benchmarks, we can start, if we look at a national level, we can say we should be looking to drive an 8% click through rate. excellent. I'm driving campaigns. I'm looking at my reporting. I've got most of my portfolio driving an 8% plus click through rate. I should be happy. But in terms of how does that start to hone in on, I think you brought up a submarket level, because housing markets, rental markets around the country are vastly different depending on, are you in Phoenix, Arizona? Are you in Nashville, Tennessee? Are you in Austin, Texas? Level of competition is going to impact those. So I think doing our due diligence to, understand that there's a benchmark for a reason. It's a good mark of good digital health to make sure your campaigns are running well, but taking into account that some things like, a very saturated market are going to inherently drive a submarkets or a local benchmark to be maybe a little bit lower. Maybe in Austin, we're just trying to stay above a 5% click through rate, because we know that, you throw a stone and you're going to hit 6 lease ups in the same block, all of them running the same digital campaigns, all of them bidding on the same keywords. And you have to understand, when you're below benchmark, why are you below benchmark? And I think I really try to provide value to my clients in that, even when we're struggling, we can still be of value to help you understand why our campaigns might be struggling. And that, to me, I think sparks a lot more meaningful conversations than when we're doing well. I mean, I love it. You get on a call and you hear occupancy is 88 trending to 92. We're ready to stabilize. Things are looking good. That's all good, but that's not always the case. And I think really digging into when things aren't working, both at a digital level and at the leasing level, that's when the meaningful conversations between an account manager and a client start to develop.
Well, what data do you feel like maybe isn't discussed enough? And it's not to cast blame on the industry or anyone else. So it's more just like, it would be great, or maybe, since in the last few years, this metric has become more important. And I'm just going to try to tee you up a little bit, because we'll get into some AI topics, I suppose. But this might be a path there, where it's like, yes, click through rate is still meaningful. It is still a signal of health. But given the dramatic changes in the last year or two, and how people search now for apartments, and how frequently they don't click at all, they just look at AI, overviews or summaries and results. So they're not engaging at the same level. Therefore, your impression, share, and I'm not saying this is right or wrong, I'm just trying to tee you up, is now something that's more important. Your visibility is more important than it's ever been. Click through is still great, but we need to start steering the conversation more towards visibility, even in search, paid search, not talking just social or display or anything else. So, yeah, you can either jump on that one, or you could take it a different place. But just curious, as you're talking through data, what are some of the things that have changed and where you're focusing, like which metrics?
Yeah, I think it. You can tell me if this is kind of what you're thinking here, but to me, it's not so much a metric that has become maybe. It, it, I'll back that up a little bit. There are metrics that I think get hyper focused on, and that is from paid search specifically. What sort of digital acquisitions are we driving? And what I mean by that is what folks are landing on the website, filling out a form, applying, calling the property. We're looking really hard at those and what we're paying to get those. And when the volume of those goes down and the cost to get those goes up, it becomes a hyper focal point of like, we need to optimize this campaign. But why, I think, is the piece that gets missed. And I think, unfortunately, one of the biggest challenges that the multifamily industry faces is a tech challenge in attribution, how we're awarding credit for what campaigns are functioning and what campaigns are not. And to really kind of illustrate this for the audience, how we're able to decide what campaigns and what channels are functioning is we are able to essentially append a little tracking appendage to an ad, to the URL of an ad, so that we know when someone clicks our ad, if it's a paid search ad, they'll land on the website, and now we know that this person has come from a paid search ad. And now if they fill out a form, it's going to keep that tracking parameter there for us, and we know that that person has converted through a paid search ad. That's a perfect little journey. A tech issue that I've seen so rampant in this industry is, unfortunately, when folks behave like people do and they're trying to understand what they're looking at about a property, they're not going to convert on one page of a website. They're going to move from page to page. They're going to check out some floor plans. They're going to check out the gallery. Well, unfortunately, after they've landed on that first page, they'll move to a new page. And now we've lost that tracking parameter. For some reason, there is a tech gap that is stripping the tracking parameter. And now we're a little bit data blind. We no longer know that that person came from paid search. They may still convert. They might fill out a form. They might apply. But now we don't know it's from paid search. But we still paid for that click in the first place. They still made it to the website. And now it just looks like we lost them there, when in reality, we may not have. We just got a little bit data blind. And I think that is going to be a continual focal point. So rather than zooming in, why are my acquisitions decreasing? Why is my cost per acquisition increasing? I need to fix that now. Maybe it's just a bit of a data blindness issue due to a technical hurdle that I think a lot of these web vendors are working hard to help address.
Yeah, very difficult problem, and one that gets me riled up whenever I start talking about attribution models or multi-touch attribution. I think it's a bit like the horizon. You every time you think you're closer, you might get to it. It moves again, and it's not something that will ever really be fully and confidently understood. That's just and it's not even being, I don't think, cynical, but um, how you almost went where I guess described this, and so I'll add this to your kind of thoughts, I guess, description of zooming in, but then the realities of sometimes being data blind. Is it now, are we shifting a little more towards zooming out versus zooming in? Is that a better way, to troubleshoot um what might be happening or not happening at a property? Because I think, it's understandable, it's natural. It's like usually you start up here and then you drill down. uh,
Hmm.
but and not to say that we're starting down low, but I think that there are more challenges than ever in really drilling in, and getting super prescriptive with, what's causing, leasing velocity to slow down or conversion rates. You still need to do that, but do you agree that there's also value, and maybe it should be part of the playbook in troubleshooting, and also zooming out, not just in?
Agreed. Yeah, I think in this case the zoom out. So like after I've zoomed into this attribution piece, and maybe that's what's causing my CPA, my cost per acquisition, to look really rough. Well, that's all fine and good, but what if now, as the account manager, I reach out and talk to my point of contact, the PMC, and say, Ian, don't worry about it. Leasing is great. We had, month over month, 25% more leads, and we had 12 net leases. Well, I've zoomed in on this attribution problem, but it wasn't really a problem in the first place because, like I said, even though we lost the tracking, we didn't know it's from paid search. That lead made it there eventually. This is one specific user journey, but this happens with, dozens, hundreds of leads a month. So connecting that data with my PMC's data, their CRM data, we find out, well, lo and behold, we don't actually have a problem here to optimize around. We just, need to pivot what we're looking at. And as you put it, zoom out a little bit, big picture here, still meeting the goal. We're still driving leases.
Yeah, definitely. Well, one of the questions I don't always hear directly, but have occasionally, and certainly a ton recently secondhand is just around this new renter journey and how people are, I'll say, behaving differently. That may sound a little weird, but just what we had seen in over the last decade, even certainly last 5 years in a customer journey for somebody to end up leasing is pretty significantly shifted with all the AI, I guess, options and search results.
Hmm.
So I don't know if this is something you've been hearing quite a bit about in the last 12 months, but for those marketers that are listening, which is frequently a big portion of the audience, um, wanting to know what should I be doing to calibrate, I guess, my strategy, or is there a calibration? There's some best practices already forming, and how to think about marketing and to this new renter journey that has so much more of the whether it's ChatGPT or whether you're just on Google and you're seeing these overviews. I think it's probably $1 trillion question, not even $1 billion question, as to like how do I start showing up more regularly within those AI summaries. And I'm not sure any agency should sit there and say they have all the answers yet. But yeah, is that something that has been posed to you already? Like, hey, you have any suggestions or best practices? And then what are you telling them?
Yeah, I mean, this is to me. I mean, like you said, yeah, maybe $1 trillion question, but is so fun to talk with our organic social and organic search strategists to figure out how to do just that. Because at the moment, there's not a lot of monetized ad placement right now. We can't do a ton on the paid side to get after us. Google has a few tools out there with Performance Max, and now coming down the line, Search Max, AI Max, whatever they're calling it. But the paid opportunity, it will come. It's just not quite there yet. So the opportunity lies in organic, and then how do you show up there? How are you showing up for these Chat GPT queries? How are you showing up in these Google, these quick summaries, these AI summaries from Gemini? You are optimizing your website to be found organically. How these new renters are searching with their long tail queries that you wouldn't be, 5-10 years ago, you wouldn't punch into Google. Hey, chat, please find me a 2-bedroom apartment that's pet friendly near this neighborhood with a pool and all under 2,300 a month. That would have been quite the search for Google to even accomplish. And it probably wouldn't even get you the most relevant results. You'd get pieces of that. But now ChatGPT could do that it can deliver you those results very pointedly. And if you want to show up there, you need to have the answers to those questions on your website. So your website has become it's always been your conversion engine. But at the moment, if you're going to capitalize on AI and taking up that real estate, you've got to optimize your website, I think.
Well, directionally speaking, I'm curious if you have an opinion on whether, like, if you were marketing a lease up, uh, categorically, whether you would be thinking, I should be spending more or less money with ILS, more or less money with search, more or less money with social, more or less money with video. What's clear is you're saying you cannot overlook, your nucleus, I guess, your website, and make sure the content's there. But let's kind of go off-site and talk about
Hmm.
the different media mixes, or I guess platforms. Any early conclusions or opinions on how you might adjust or modify the mix from where it stood a year or two ago to what you'd be thinking in 2026?
Yeah. Oh, it's a good question. And, you know, I know that digital marketers, even around the agency, we have this discussion of what's the right mix. I think, and I think a number of account managers at Digible share this opinion, that multifamily spending a little bit too much money in paid search. I think it's the easy one. It's the easiest to understand. I know I spoke a little bit about attribution a while ago, but as the challenges it has there, it's still the easiest channel to understand why it's performing well. But the thing is, paid search, there's only so many keywords an apartment complex can bid on. It's very different from different digital advertisers where they have unique businesses, they have unique products, and they can, generate dozens of different keyword iterations. There's only so much of that in multifamily. You can fold in a few more neighborhoods, you can fold in a few amenities that might be searched for frequently, but beyond that, the pool of keywords is quite small, and you're competing with, like I said, in these very competitive markets with, sometimes dozens of advertisers driving up your CPC, and it's really hard to differentiate yourself anymore on paid search. So you've got a lot more opportunity in some of these upper funnel channels that, yes, may be much more difficult to measure the success of. And I think we as account managers have an opportunity to better tee up that measurement and kind of prove that out. We should come back to that in a second. But you can differentiate yourself visually. You brought up video. Video is in conjunction with, this new rental journey you've spoken on for the past over the past 5-ish years. The rise of TikTok and how dominant a platform that became in such a short amount of time. Entirely a video-based platform, and now a powerful search engine. So combining video in your media mix with a search engine, which is the way, some of the, younger millennials and Gen Zers are utilizing. We know they're on these platforms, and if you can get the content out there and make it searchable, you've kind of gotten into a much easier way, a much cheaper way to diversify yourself, because not everybody's doing TikTok yet. Everybody's on paid search, but are they on TikTok? Are they on YouTube Shorts? You got to get yourself out there and kind of diversify yourself. And I think video is your leading content piece.
Cool. Well, let's stay on it just a little bit longer then. So you've convinced me, to experiment with TikTok on my next lease up, or even on a stabilized asset. And I have quite a bit of young professionals, at my property. So it seems like a perfect, experiment or fit. How do I measure that? So this brings us back to where we started, kind of on the data side. Do I evaluate it the same way I'd evaluate a search campaign? And we both know the answer is no, or not exactly. But could you draw the distinction in how you would encourage marketers to evaluate success metrics for a TikTok campaign versus what they're accustomed to with a search campaign?
Yeah, absolutely. I think I'm going to start with the worst answer. It depends. But the better answer is, and I say it depends on the goal. So likely, again, bringing us back to the client's goal, we're looking at leases here. If we add in TikTok, we know that we are more than likely not going to be able to track even, digital acquisitions on the website from TikTok, much less a lease. That's the inherent challenge to proving out the value of it. But could we fold in TikTok to the media mix in a much more thoughtful way, in the vein of thinking about an incrementality test? Could we get our core media mix off the ground? Say we get paid search going, we get a display campaign going, and we get a paid social campaign going. Let's get those campaigns ramped up and get them moving so that we understand baseline performance, and then work closely with our client to say, let's change nothing else. Let's add TikTok into the fold, and let's measure a period over period performance. Do we see an overall lift in website traffic? From there, did we see other engagement metrics on the website get better so that we know that A, traffic increased, and B, quality increased? And then ultimately, did leads in the CRM increase? Did net leases increase? So, that's like the baseline incrementality test, is just folding a new channel into the mix without changing anything else. And I think we, as account managers, Digital, really should strive to do that better, because we know as digital marketers, it's going to work because we've seen it. We just need to prove it out a little bit better and report on it, I think, a little bit more strategically.
Well, I love where you were taking that. I couldn't agree more as far as the, being very intentional about the incrementality, or like one at a time. I think it is good to have kind of your foundational media mix. And then as you do experiment, because TikTok's not the only option, but
Hmm.
with some of what you might call secondary, tertiary platforms, that you really lean into the Google Analytics, not over focus on the campaign data from TikTok, or because it isn't as robust as search. There isn't as much tracking available. There isn't as much targeting. There's a lot of things, and it's mostly because of scale, but it's also maturity of some of these platforms that put you at a disadvantage if you were just trying to make decisions based on the campaign data. So taking people into and doing it very thoughtfully into Google Analytics to really examine the impact, I think is great. So it's a great insight. What about budgets for things like TikTok? As you talk experimentation, lease ups often on the digital side are sending on the for class A, could be 5,000. Sometimes we see 15, $20,000 a month. Those come down quite a bit once they get stabilized. But if you're living in a range of, let's say, 5 to 10K, and that might or might not include some ILS spend, and you're at a point where you think, hey, now's a good time for us to go ahead and test TikTok. What kind of budgets? How do you back into that? And is it often at the expense in your experience? I mean, probably not what you'd like to see of some other media. It's like, hey, I'm going to move from our email. I'm going to move from, some other platform, or is it, is it more, hey, this is an opportunity. We're trying to accelerate to add more budget, and I'm recommending a $1,500 TikTok campaign, and here's why. So,
Hmm.
yeah, talk a little bit about the equation of bringing in something like TikTok, both when, at what expense. You've already talked about the tracking, and then what kind of budgets have you seen bear some fruit?
Yeah, to decide whether you reallocate or whether you add additional budget. Obviously, those decisions come down from what was our annual budget to begin with. Do we even have money in the budget? If it's there, great. We can still be strategic about it. How are we doing? Like, are we trending well? Are we meeting budgeted occupancy goals on a monthly basis? Well, at that point, we probably don't need to just add additional spend. We can probably pull a little bit from paid search, which is where a lot of the budget tends to sit. And honestly, you get a lot of bang for your buck in TikTok just starting at $500 a month. You can get tens of thousands, hundreds of thousands of impressions in a TikTok campaign for a fraction of the budget on TikTok. So start there. And, again, it would be a scenario of start with maybe a smaller budget to see what sort of incremental growth you get there, and then from there you can start to build on it. And I think that's something I'd really like to do more of for my clients, is just slowly build that up rather than it feels like a really big gamble because nobody's spending $3,000 a month on TikTok. They're doing that on search because we've done it forever, and that feels comfortable and that feels right. But I think we need to stair step that up and prove that value out, which I'm confident that we can for some of these other channels.
So stair stepping up, could you be more specific? Would you say, hey, because I'm sure there's a point, and I'm not up to date on minimums with TikTok, but they're not going to let you spend $1 on TikTok. Yeah, curious. Like, would you say, hey, starting point is usually $500 or $1,000, and then we could tease that out and see where diminishing returns lie. So maybe you might see that move all the way up to 2 to 3 grand, but typically we like to start, or it's a good, a good, good budget would be in that $500 to $1,000 range.
Absolutely. I definitely think it's the starting point, and from
Cool.
there maybe the testing just needs to get a little bit more advanced. I mentioned the bare minimum period over period incrementality. Maybe we start to experiment with a geo holdout test. So, for maybe the non-marketers, we're only serving TikTok ads to, half of Phoenix. We're not serving TikTok ads to the other half. And can we measure the performance between those two to decide, oh, we got significantly more engagement. We got more leases from the east side of Phoenix than we did the west side of Phoenix because they saw these TikTok ads. So I think there's just lots of opportunities to really continue to prove out the value of these upper funnel channels, but we have to lay the groundwork to do it.
Well, talk to me. I'm going to keep going. I'm going to say with TikTok, but uh, and I know there's been plenty of, I guess, panels on this now in the industry. Yeah, whether you seen it at AIM or NAA, not necessarily all about TikTok, but I think it's fair to say it's trending on some level. In
Mhm,
multifamily. And often creative gets brought in to
mhm,
the conversation of, what does a good TikTok campaign look like? Because, if you're just a consumer or your kid is, you might get maybe the wrong idea or impression of, what what's cool, what's not, or how
mhm.
much does cool even matter. So could you throw a few headlines or, again, bullets out here as to what you've either seen or you would just advocate for, um, small sample size or not, and how to think about the creative equation? Is it for you non-negotiable? It's like this has got to come from the property manager, a resident, or you know, the flip of that, I guess, higher production doesn't need to be user generated content. Um, Timeline. You should be showing amenities. You shouldn't be showing, actual floor plans. I'm just trying to get you started, Ian. But there's
Yeah,
a lot to think through, and scale and production is always one of the inhibitors with video. And of course, this has changed quite a bit with AI video, like taking
mhm.
assets and turning it into video. So, yeah, why don't you just dive into creative and start with TikTok? And if there's anything else you want to add about video and multifamily, let us have it.
Yeah, you bring up another challenge, I think, to the multifamily industry for a lot of assets. They struggle to have the budget to create, super high quality, high produced assets. Which, as a marketer, of course, that's where my head's going to go first. We need a very polished asset, but I don't think it's necessarily a barrier to advertising successfully on some of these platforms. I think even with a sparse creative budget, even if you're creating something as simple as a slideshow video, it's sort of about the story that creative tells. As long as creative is solving a problem for who is viewing it, it's going to be engaging. So, if your video comes off as, sort of really just saying how great my apartment complex is, there's no real substance to it. It's just a real shiny video, or maybe images of this is the best place in Austin to live? Or is it answering a question that someone in Austin is looking for? They're looking for a balcony with a river view and a two-bedroom apartment. Does the creative like really showcase something like that? What are what are your prospects after? It's not, you don't want to push this on them too aggressively. As much as brand awareness channels are a bit more of push marketing versus pull marketing, ultimately multifamily kind of pins us into mostly being pull marketing because everyone needs a place to live. They're all looking for it. So you don't really need to sell the idea of your property. You need to sell the idea of why your property. And so I think the quality of the creative, yes, that will improve digital performance, but you don't need the most polished asset to do it.
Yeah, I love that. I think hopefully people take note of that those comments, because and part of this is maybe my own recency bias, but reading a book called Demand, I think it's Demand Side Sales, but it's as our SVP of product said, it's really a product book masked as a sales book. So meaning there's a lot more value maybe from a product lens, which in this case, I'm saying the product is the asset, right? Is the
Yeah.
property. And, one of the kind of big takeaways, I guess, or concepts is focus more on the struggle that somebody's going through in making a decision around a product or a
Hmm.
service, and less on, the features and the benefits. So it seems like you're saying something pretty similar here, but instead of just like, look how cool this apartment is, it's like, what are some of the key struggles in thinking through and deciding ultimately on where to live, and think even a step further, like how might that be presented as a question, um,
Hmm.
through a search process, because that has blurred the lines a bit in what you're saying between, oh, it's, push pull, it's like obviously what Google is, it's the pull, and then the push is all this upper funnel stuff.
Hmm.
But now with the way people are navigating this, I guess behaving online, I think it's more converging. And so you still need to show the experience and the why, but some of those questions that I think are driven by the struggle, of like, what, and I'm not trying to make this all about pain points or take this further than where you were taking it, but how do you combine those in a TikTok campaign or in a video campaign? So feel free to comment briefly on that before I piggyback, because I want to go a little bit further, and you may not have the answers, and feel free if you don't, or haven't seen enough data yet, to answer with confidence what I'm about to ask.
Hmm.
So, but yeah, before I move on, any other comments or response to what I just said?
Well, you kind of poked at a little bit, I think, is that it doesn't only have to be about the struggles, that, people are facing. Because I think the easiest example of kind of illustrating my point here is if you take a very high end, luxurious apartment, those folks aren't necessarily looking to solve a struggle, but they have a very specific thing in mind, what they're after. And so can you actually, if you are a luxury high rise in a downtown market, can you actually showcase why you are the luxury option? Not just that you are a luxury option, but can you showcase what about you is the luxury option? Do you have true distinguishing aspects that set you apart? If so, tell the story of those, because that's what's going to answer, you got to understand your audience. That's what that audience is. They're looking for something very particular.
Yeah, totally. Someday we'll come back to the struggle in that book. Do a podcast on it, because it does. I don't want to say flip some things on your head, but has some fairly significant, I guess, deviations from how many marketers think about bringing a product, to market. So, asterisk, footnote, whatever. Uh, so the question that I want to ask is, and I'm going to be very specific, which I know you're not prepared for this, but I'm still going to see if you want to answer it at all or try to answer it. Better to build a TikTok campaign with user generated content in the form of a resident, better to have a property manager that's on site in that campaign, better to have a TikTok campaign about the community. And I know you're going to say it depends, Ian, but you're going to have to go further than that with me. So often, what motivates somebody to live somewhere is the community around that asset. It's not actually the asset itself. That's
Mhm.
clearly important too. Or something that's more honed in on amenities, the experience, but you don't actually have, what's common in TikTok is some type of personality, right? Whether it's a resident, whether it's a property manager, it's not the community. We're just showing you as best we can what it looks like to live here, but there isn't going to be somebody, in the video actually kind of guiding you through that. So I gave you four clear ones:
Mhm.
community, asset, like on-site experience with nobody in it, two scenarios where somebody is in it. One is an actual resident that lives there that is willing to do a TikTok video, or the property manager. Which one, and or just give me your order.
Yeah. You knew I was going to start with it depends, but I will expand beyond that. Um, it it depends on your strengths. I think. Do you have, as a marketer, understand what you're working with in terms of the asset and in terms of a team? Do you have a really charismatic leasing agent or property manager that is very savvy on socials and active, lean into that. You can collaborate with these folks. And, I have one community manager I work with on a monthly basis who's I've seen all the content she's produced all month, and it's genuine, it's authentic, it's fun. That's You lean into that first and foremost. But what if you don't have that? But maybe you have a resident referral program. Well, there's an easy one to build on TikTok. That's an easy use case for UGC content, user generated content. That lean into that first. I think I hate to say it depends again, but each asset's going to have their own individual strengths, and you have to lean into those based on what they are. Amenities, honestly, unless you have something mind blowing, I guess this is the one I can probably knock down maybe a couple of pegs. Unless you really have something that nobody has, and maybe it's just submarket, within 10, 15 miles of you, you have this, pool's the easy one to go to, but maybe you have an unbelievable gym with a really cool training program. Like, if you really have something that nobody else has, go for it. But I find that that's less likely than if you have a really strong leasing team, or if you have a really strong or if you have a good referral program that you could lean into with potentially influencers and getting into TikTok and that. So I hit three of them. What was your fourth one?
I think it was just community, like,
The community. And
what
then,
it's like to live around there, not necessarily on site. Yeah.
all right, I might revise to say, only because I get really passionate about the piece of a community that does, lease up with a meaningful community that likes to interact with one another. And it's just wonderful to see from, just a life perspective. But two, makes life really easy on the leasing team when renewals come around. Folks want to stick around, they want to stay there. And if you can shut that back door, marketing becomes very easy. So if you do have that community aspect, organic social becomes a very powerful channel for you to continue to foster that. So it gives you a really great avenue. So maybe because of that, I will place that at the top. And then you can mix and match a good leasing team, UGC content, a referral program as two and three, and then maybe advertise amenities as four. Obviously, we haven't exhausted the list. But if I had to give you a confident answer, I'd feel really good about that.
Yeah. Well, I love that you're saying it depends, even though, and I didn't tell you not to say, I just knew you were going to say. But it's what makes you a great account manager is, there, you shouldn't, I mean, certainly you have opinions, and there's got to be some type of default, I suppose. But yeah, I mean, there's a bunch of variables, and so there's no cookie cutter solution, especially I feel like when it comes to creative. But there are some best practices, which is more what I was trying to kind of flesh out.
Yeah.
And what about kind of variation, like with TikTok? I know I'm continuing to hang on to this, but so if you decide, yeah, I'm going to do UGC, or I'm going to lean into the property manager, or maybe even I get an influencer, would you say, hey, best practice is you should really do 5 or 6 and
Mm.
release and optimize like according to performance, or would you say, hey, because budgets typically aren't going to be 50, 10,000. I'm exaggerating, but they're going to be starting between $500 and $1,000. Really, one video for a month is what I'd recommend, and then we'll decide whether we want to create some, I'll call them variations, but some yes, just some different looks at this. Because it comes up too a lot back to expense and scale, and this is creative at large, not even just video, but it's like hard for these communities based on what they have available, but then you run into the time constraints that a lot of these marketers or property managers have, and they're not super equipped, I'll say, to refresh creative.
Hmm.
Where it's like, hey, I know I've been running that for a month. I need to go ahead and switch to a new video. So any comments, and more specifically with TikTok, as far as, how many variations and when's a good time to really look at some variation?
Yeah, I mean, as a starting point, usually where we start is let's get at least one video, because to your point, creative constraints can come into play rather quickly. But let's get off the ground. like I said, maybe do that incrementality first. Let's prove out the value of it, and then we can start to play with creative. So if we've proved out the value, now we can maybe stair step budget up, maybe another $500. Maybe we're playing with $1,000 now, and now we have a little room to test additional creatives. And what's really great about TikTok and some of these paid social channels is you don't only just have performance metrics to help you understand the success of them. We have the content of how folks are engaging with them. We have a comment section. We're able to understand, is this resonating, or are you getting very, very negative reactions to some of the content you're putting out? Well, now you have to get you start to get some actual creative learnings from your audience, not just from interpreting the data, which is super helpful. And if you find yourself working with a client that's super handcuffed by what creative is available, you can still leverage maybe their organic content. I had one very recently. We were only running one video. We were a little bit unhappy with the engagement we were seeing. So we wanted to test something different. And it was we started with a much more property focused video that kind of highlighted the strengths of the property, amenities, the floor plans. And we stole it was UGC content from their Instagram post, cut it down to maybe a 30-second ad and added that into the fold to see if it would do any better. And lo and behold, we were getting stronger engagement from it. We were getting positive comments on it. So it's, even in the most handcuffed situations, you can usually find a way to leverage the channel and even test creative.
It's such a great example. Again, I think you brought a lot of value in a short amount of time on the show, but just how to be more effective at repurposing existing. You mentioned just cutting down an Instagram. So I think there's more opportunity than maybe people realize. One of though maybe, I don't know if it's controversial yet, but things that we're starting to see is taking assets and using AI tooling to turn it into 20 different videos.
Mm-hmm.
So is that something either your clients or you have also formed either some best practices or have some cautionary tales or just some opinions on when it's like how far to take AI tooling when it relates to creative or just the property experience?
Yeah.
We've all seen, like, in fact, I just have to say, because it was funny to me, my wife, one of my daughters brought her, and this seems so antiquated, this example, but it's still funny to me because it just happened yesterday, but showed her a video of a bunch of kittens. I don't know what they were doing. It's like, I saw that video with the dogs. A lot of people saw this like 4 years ago from OpenAI. It's like, that wasn't real. But it was just, they were messing with mom and wanted to, and sure enough, she was like, that's adorable. And they were like, it's all AI. So is that okay, in multifamily where it's like, and I'm joking and I'm not, but yeah, are there any lines, best practices, is this even a conversation yet about how much AI tooling is okay and not okay when it comes to trying to showcase the experience of a property?
Yeah, I mean, the controversy is, I think, twofold. One is that, as far as AI has come in a very short amount of time, we're still very much in a fledgling phase and the tools are constantly improving. So you will get poor results sometimes that, are not going to resonate with a prospect. And I think best practices have a long way to go. But as long as as long as folks who are creating creative, as they begin to fold these AI tools into their repertoire and how they're designing things, as long as you remain authentic to the goal of what creative should do, as I mentioned earlier in the show, of you are still trying to solve your prospect's problem. You're still trying to inform your prospect as to why this property makes sense for them to live at. As long as you don't deviate from that, then you can use it carefully to enhance an asset, and it's not going to come off as fake or poor. What's interesting to me, and it's I think, I'd be curious what you think about this. Is multifamily already had a sense of this? People accuse AI of being fake, but multifamily has always began with renderings, and AI is enhancing those at a very rapid pace. But that's always been a pretty inherent part of this industry, because you can't shoot a non-built building. You can't shoot a unit that hasn't been renovated, but you can give folks an idea of what's to come. And I think you can still do that pretty authentically, and AI can assist in that. So I think much more to come. But I think that is an advantage that this industry has, is that sort of teasing what's to come, as long as you don't, mislead a prospective renter, is going to be just fine to use these tools.
It's a great point. I hadn't even thought about that, but yeah, 3D renderings and virtual showcases, if you will, certainly of buildings that are still in the ground, has been around for at least a decade, and so therefore is the standard. I don't want to call it lower, but just maybe a little bit. There's a little bit more latitude than we realize. I think you also use the word authentic, which is critical, right? And that's where how do you reconcile AI with authentic? But that as long as you're not straying so far that you're misrepresenting, because that's where obviously things can blow up. Where
Mm-hmm.
somebody comes to the property and it's not at all what they saw online.
Right.
Um, so kind of wrapping up here, because we could go for 4 hours, that. Um, what are some of the other things I'll say that maybe are trending in conversations you've been having or had in 2025? That are you feel like are meaningful takeaways, or things that you're going to probably need to be focused or more prepared for in 2026. So this is just a chance for quick reflections on the year that just wrapped up, and now the year that we're entering.
Mm-hmm.
Yeah, what's kind of trending for you? And feel free to share, even which kind of regions, or if it's pertinent, but certain markets. But yeah, I think that would be meaningful for people to hear.
Yeah, I have one big one. I can pick a different one if you think it'd be more interesting, but I think the big one that's has entered the chat in the back half of 25 and will be a major thing to understand strategy around is total monthly leasing price. And I'm, you know, I I don't want to make an assumption that everyone in the audience understands this, especially as it's so new. But just making sure, essentially, apartment complexes need to be completely transparent to renters about what they're going to pay on a monthly basis, including all fees that had not necessarily been initially disclosed. And that's a major challenge for a marketer. It's a major challenge for the industry, but as a marketer, if you were able to advertise just the base rent for the longest time, for advertising up until this year, you could have a real advantage there if you had, a couple $100 cheaper price in your ads than your competitors. But now, if these other things start to get folded in, and now you're a little bit more expensive than your comps because of whatever your fee structure is, we're going to have to be really, really conscious about that in speaking to that, because price has become a very, very sensitive topic for our audience in the past few years. So that's the big one on my mind heading into 25, or excuse me, heading into 26. And I think it's going to be a bit of a we spent a lot of time today talking about creative. I think it is going to be a bit of a creative conversation. Here's what rent is here, but maybe if you can tell the story of here's what you get here at this community. This is, this maybe it's not the price you want to see, but check out what we have to offer you. And I hope it's something that entices you. So that's kind of where my mind is turning as we head into 26. I think that's the big immediate challenge. But we've got some great minds here putting our heads together to do it. And I just, I want to help my clients work through it as well, because I know it's probably a bigger pain point for them to deal with at the industry level, at the PMC level, than just the digital marketer.
Yeah, no doubt. Well, glad you highlighted that for sure. I think it's a trending and is only gonna the momentum's gonna grow, and I think in a good way. It doesn't always necessarily happen that way with trends that hit any industry, but this one I think is great because unfortunately, and it's not pointing fingers, but some PMCs more than others weren't being as transparent, and it was creating confusion and a lot of friction between
Mm-hmm.
renters and multifamily owners. So I think what's interesting in 2026 is just how much discretion interpretation is allowed. And because in the short term there could be very deliberately some people that are still not being fully transparent, or they're taking a different approach to the total monthly leasing pricing. And I know that sounds funny, and I don't think there's too many sinister owners, PMCs that are going to try to take advantage. But the reality is that some are further ahead, and often it's the
Mm-hmm.
larger PMCs that are building internal policies and working closely with legislation and with industry leaders, and bringing kind of these I'll say communities together to try and approach this the right way, and not necessarily getting rewarded right by the consumer, because
Mm-hmm.
for them, as you said, all they're seeing is now that's $200 more than the one that I just searched 5 minutes ago.
Mm-hmm.
And so that's how that plays out in the short and the long term will be really fascinating. But the good news is this is healthy. This is the right thing to do, and it seems like the industry is rallying behind it, especially the leaders. And I expect it to just accelerate quite a bit in the next 12 months.
Agreed. And in the spirit of, authenticity, being transparent with your pricing is a major step towards that. And, might be a challenge for a marketer in the short run, but ultimately, I think a win for the consumer and a long-term win for the marketer, because you want to be transparent, you want to be authentic and show what we have. So, it's it'll be challenging here, but like I said, I'm excited to take it on, and I think our clients are eager to hear how we're gonna advise on this.
Yeah, totally. Well, Ian, this was awesome. I expected nothing less. You have so much great value to bring to our clients, to the industry, and we're just grateful you're at Digible. So we'll look forward to a round two at some point, because we can go deep, I think, in just about any topic together.
Well, I'd
Um,
love to come back. Thanks so much for having me on, Reed.
yeah, you bet. Well, if you have comments, questions for either one of us, I think you know by now how to get a hold of me. But I think we only have one Ian, which for so many other names we don't. But if you want to get in touch with Ian, just Ian@digible.com, right?
Ian.hey@digible.com.
All right, I screwed that one up. I don't think we have two Ians, so I don't know how that happened. But all right, well, till next time.
Thanks, Reed.
See ya.